Okay, guys, tonight I'm going to give you 5 tips on how to make sure your insurance claim is not declined. Okay, this is very important, need to knows. Okay, so I'm glad you're here. So, first of all, I want to welcome you to Tuesday Tea Time and Insurance Tips with moi, your host, Sybil Green Padilla. I am here, the owner, insurance agent, and broker of my insurance agency, Green Insurance Solutions. I'm here every Tuesday night to provide you wonderful insurance information, need to knows. We even do fun facts in an atmosphere that's not so intimidating. We actually are just having a cup of tea, sitting across the table chatting. So I love tea. I hope you have some good tea tonight. I have green tea. So join me, take your sip. I'm going to wet my whistle a little bit and we're going to jump right in. Okay, so I'm going to tell you 5 reasons why an insurance claim would be denied. As you saw in my topic, her insurance claim was denied. That is a client of mine. I'm going to tell you all about it as we're talking about these 5 steps. Now, I want you to stay to the very end because I was able to help her do some things to appeal. If you have an insurance claim that may have been denied, you feel it was unjustifiable, should not have been, because insurance companies do make errors as well. So I'm going to give you 2 tips at the very end. So stay tuned, okay? Don't leave. And we're going to talk about, I want to get through these 5 things for you, okay? And I'll tell you about my client. So number 1 is a material misrepresentation. So it's a big word for basically an untruth was told, a lie. So when you do a material misrepresentation, it's failure to disclose a medical condition or often a pertinent information. It could be about your medical history, it could be about your hobbies or your behavior, okay? You've either not told the truth or you have omitted the truth. Both are considered material misrepresentations and insurance fraud. So want you guys to, when you're doing these applications with the agents, please, we want nothing but the truth, nothing but the truth, so help you God. So we want you to tell the truth, okay? So with my client, sometimes material misrepresentations can be intentional, sometimes they may not be. Now with my client, she was an older lady and she had sweetest pie. I'm sure she did not have any intention on misrepresenting, but that's what happened. When her daughter had an insurance policy on her, and when she died, of course, the insurance companies have a 2-year contingency. So within 2 years, if a death occurs, insurance company they'll go back and they'll do a full investigation to make sure there was no material misrepresentations on the application when it was done. Well, when they went to hers back to do the investigation for her, they did find material misrepresentation. Now, what hers was, and this I know wasn't intentional, okay? She was a senior, and this could have happened to any of us, really. But what happened was, when she did the application, she was honest when we asked her the heart question about heart attack. She did have a heart attack. They put in a stent. And the following question was when the surgery was done. And we went back and we found out that the insurance company declined her because she was like, I promise you guys, about 2 days off on the date. They declined the claim because they said she misrepresented it. But she was only about 2 days off. As a senior, or even not as a senior, sometimes we can be a little fuzzy on the dates. Well, there was a lesson learned for me and for you, for I'm sharing tonight, to make sure you have those dates and everything right. Well, then daughter called, totally hot mad because I was the agent, and rightfully so. I would have been the same way. So I contacted the insurance company. I got all the information that I needed, found out the reason why, and I helped the daughter proceed with what's called an appeal. Okay, and I'll talk to you a little bit about that at the very end, so stay to the end, and I'll give you some steps that you can do to do that if you feel like it was unjustified. So that's kind of what happened with my client. But I want to tell you the steps to avoid it is to be truthful. Make sure you have those dates. Don't guess. Make sure you have the specific dates when they're asking, okay? Now, the larger policies do require more questioning. The final expense, small policies usually don't go through all that, but usually on these bit larger term policies, you do have a lot more questions. So that's probably what you'll find. So any type of misrepresentation is going to be a reason for a decline of a claim. Okay, now the biggest one is the tobacco question. So I had a gentleman that I did a policy application with him on the phone. He was non-tobacco. Okay, we checked non-tobacco. Now this particular company required that I go out to the house to get what's called a wet signature. So I had to get his signature. So I went to his house, pulled up, and immediately, guys, when he opened the door, the tobacco aroma just hit me. He was filled with tobacco himself. House smelled of cigarettes, and when I sat at the kitchen table, he had a little ashtray with several cigarette butts in there, so I knew he was a tobacco smoker. Now, me being the fabulous, awesome agent that I am, I couldn't in good conscience submit that application as non-tobacco, because now I know he's tobacco. So we sat down, we had a chat about this, what we're talking about, and he agreed to pay the smoker rates, and we submitted the application. So that was a good turnout. But guys, what if I didn't have to go to get the signature? What if he died as a non-tobacco? Well, that's considered misrepresentation, and the policy would not have been paid. Now, possibility of the premiums being returned, but what the company would have done is went back to all those premiums that he paid as a non-smoker, as a non-tobacco, and they would have calculated what the premiums would have been for him as a smoker, and they would have added that on or subtracted that to the money they gave back the family, which would be the premiums minus whatever that difference was. So that could have meant they might not have ended up with any, or they might have ended up with very little or none at all. So this is why it's so important to be honest on these applications. So enough for that. You all know what misrepresentation is. So the next one is number 2 is the insurance premiums were not paid. So the policy lapsed. This happens a lot because when we deal with seniors, a lot of times they like to mail in, they're old-fashioned, like to mail in their premiums. They don't mean for the premiums to be missed, but sometimes they mail them in. I've had clients that the check was lost in the mail, and I had a 80-year-old male who mailed in his check. He swore he mailed it in, and his policy lapsed. So the company, he was calling in to get a whole new policy because he had this policy for years, and it got lost in the mail. The company never got it. So anyway, the policy lapsed. So I always tell people, yeah, we can use mail, but mail is so unreliable now. Snail mail, people steal mail, gets lost in the mail. Stories about mail being found in the water, so all kind of horror stories. So I always tell people, just get in your mind that it'll be an automatic payment, and you want that, because what if it's a day, her knees are hurting or his knees are hurting and he can't get to the post office, and what if he gets sick and has to go to the nursing home or the hospital, and he didn't get a chance to mail off that premium check. We've even had stories where we saw the envelope with the stamp on them never got to the mailbox. So just have in your mind, this will be an automatic premium deduction. So you don't want that to happen. So premiums not paid, that's a biggie. Now, I do want to let you know that most insurance companies do have a grace period, usually 30 days. After the premium has not been received, sometimes they have 30 days before they actually lapse it or cancel it. So always ask if the policies lapsed, if they're in their grace period. Now, they would have died in their grace period, and then they usually just deduct the premiums that were owed from the premiums that they give you back. So just ask the right questions, okay? Third reason is you outlived your term. Now, you guys, if you follow me at all, on this channel, I'm always talking about whole and term and the difference, and I always tell you term is a temporary policy. It is only usually for 10, 15, 20, 30 years at the most, and they expire. So know what you're buying. Terms are not bad. I've kind of check out my YouTube on whole and term, and you can know a little bit about that. But they do expire. So if you get a policy at 25 and you have it for 30 years, which is usually the max, that means 25, 35, 35, 40, 55, your policy is expired. So now you've outlived your policy. And if you died after that happened, there would be no claim that would be able to be filed because there was no policy in place. You outlived your term. Now, to keep from that, avoiding that, you can make sure you know when your term policy is going to expire. A lot of people have these term policies, they don't even know they're going to expire, and they don't know they're going to go up and after you renew it. They don't know that either. So again, go look at my my channel on the term and the whole, so you can kind of know what to do on that. But the term policy can be renewed. Okay, when you renew it, now it's going to be renewed at 55, not 25. So the premiums are going to be a little bit higher. And a lot of companies, guys, will let you do what's called a conversion. You can convert that term policy over to a whole life. And again, it's going to be a little bit higher, but that way you can keep your insurance rolling. So that way, when your death occurs, there's going to be a claim that'll be paid out. Okay, a lot of people outlive their terms and they don't know it a lot of times, and when they die, their beneficiaries have no money. A lot of times they don't even know the policy had expired. Okay, number 4, death by suicide. This is a biggie. A lot of people know this. There's a 2-year suicide clause in all insurance plans. If your loved one commits suicide within the 2 years that they've had the policy, there's no claim that they will be able to. The claim will be denied and just the premiums will be refunded. Okay, so every company is different. Please ask questions, because I always tell you, I'm a contractor, so I work a broker. I work for a lot of different insurance companies, and there's different guidelines for each one. So just ask the right questions, okay? And I let you know on my channel what questions to ask. So you want to make sure with the suicide claim that you understand that within that 2 years, if they kill themselves, within that 2 years, God forbid they do that, but if that happens, then you will only receive premiums. If it's a $20,000 policy, you won't get that, just the premiums that will be returned. After the 2 years, they usually pay out the full policy. Now, all insurance companies, even after their 2-year contingent or their 2-year contingency time, they can, if they ever felt like they had a red flag, or on any application, even if you've had the policy longer, they can always go back. They have the right to go back at any time and check, all right, or investigate, especially if they feel like it's a red flag. And this could even be after the 2-year contingency time. So just know that. So number 4 is suicide. Number 5, and the last one, is beneficiary information. A lot of times people get the policies and the beneficiaries don't even know who they are, and they don't even know where the policies are. So they run around, they researching for the policy, and sometimes they never find it, and the time period goes away where they can even file a claim. So guys, this is a real important one. I'm actually going to do a YouTube on this about the beneficiaries, basically having the talk with the people that are on your policy so they know who they are, they know where the policy is, they know how much it's for, they know what to do. I like to, when my clients do their policies, when I get the beneficiary information, I like to get the phone number of the beneficiary so I can call them, introduce myself so they know who I am and they know who they need to call when that time comes, so they're not going all around hysterical, not knowing what to do. I want them to know they can call on me, okay, and I can help them through that. So letting the person know who they are, the beneficiaries who they are, and letting them know where the policy is. This causes a lot of claims to not be paid out because nobody knows who the beneficiary is and nobody knows where that policy is. So a lot of times, a lot of people call, they don't even know what the insurance company their mother or their loved one had. Now, a little trick on that is just look in their bank. You can go to the bank, and the bank will always, usually, since it's, like I said, automatic debiting, this is another reason why you should have it automatic debit instead of mailed, because upon death and a person doesn't know, they can always go to the bank. The bank will show when those payments for ABC insurance company came out, and they'll have an 800 number there, and you can call. and then they can, help you from there. Okay, so that's number 5. So as I told you guys, I have 2 other things that we can do if you feel like you had a claim and it was denied unjustifiably. What you want to do is get a claim letter from the insurance company. You want to get a denial letter from them. It has to be in writing and signed that they have denied you. Okay, and you're going to want to make what's called a claim appeal. Okay, and when you get that, you're going to have to gather all of the information on that insured: the name, address, phone number, date of birth, medication, doctor's office, all of the information. Make sure you have your ducks in a row. You can appeal those decisions. Sometimes insurance companies can get things wrong, and sometimes they can change their decision. So it would be to your benefit, like I helped my client do. You can appeal it. Now, sometimes that helps and sometimes it doesn't. Okay, if it doesn't resolve, then you can do what's called go to your local state department, insurance commission department. Okay, every state has it. I'm in South Carolina. We have insurance commissioner's office. Every state has it. So just Google the local insurance commissioner's department in your state, and you could actually file a claim against the insurance company. Insurance companies don't like those bad, negative remarks against them in the commissioner's insurance department. So you can file a claim if you feel it was unjustifiable, if it didn't get reconciled through the appeal. This is another thing you can do. And the insurance commissioner's office is there to protect the consumer. Okay, make sure the insurance companies are doing right by the consumers. That's what they're there for. So they can guide you on some other additional steps that you can do. This is what I did for my client to help her kind of get through her issue there with her decline. So I hope that information helped you. This one a little bit longer, but I hope that helped you. Thank you for joining me. If this information I'm giving you every week is valuable, please consider subscribing, liking, sharing, and hit that notification bell so that you'll get notification every time I upload. Okay, so thank you for joining me to the very end, and I'll see you guys next Tuesday. Bye bye for now.